The International Monetary Fund's new quarterly economic outlook predicts a contraction in global GDP this year of 3%, the worst economic downturn since the Great Depression, followed by a 5.8% rebound in 2021. For Australia, it's minus 6.7% this year and plus 6.1% next year. In other words, V-shapes all round. Here's what the global forecast looks like in a graph. It's deeper than the GFC this year, but next year, greater than the boom years of 2004 to 2006. But in the executive summary of the report are these words: there is extreme uncertainty around the global growth forecast, that's for sure. There's also a chart with 3 alternative scenarios: a longer outbreak this year, a new outbreak next year, and a combination of the two, longer this year plus new outbreak next year. Now, under all of those scenarios, the global economy stays in recession for more than 4 years. Last night, Wall Street looked only at the good scenario and ignored the alternatives, rising by another 3%, led by Amazon hitting a record high value of more than $1 trillion because, of course, the world is now shopping online. The local market opened higher on the back of New York, but fell back to finish lower on the day, with falls led by energy stocks like Woodside and Santos, because the oil price fell again despite the new deal to cut production. The problem is that the production cut agreed by OPEC and Russia is much less than the fall in demand. The Australian dollar slipped below 64 US cents today. And finally, another piece of grim economic data. Monthly consumer sentiment has fallen the most in the history of this survey, produced by Westpac and the Melbourne Institute, which is 47 years. And that's finance. Thanks for watching. You can check out more finance news by clicking there. And don't forget to click subscribe down there to get all the latest updates from ABC News.